mutual funds. Since a lot of people are new here, okay, I'm going to tell you a gist about what are the parameters that will go into a mutual fund and what are the things that we should be focusing on. Okay, so why is that a person chooses mutual fund? For example, see, you have some amount of money. Say, assume that you have 1 lakh of capital and you want to put that money on a financial product because maybe you're not getting good amount of interest in savings or FDs and recurring deposits and so on. Okay, and you want to put it on a financial product for extra returns. Okay, so when your person is choosing mutual fund, what are the things that is okay with? Okay, so when it comes to savings deposit, FD or RD and so on, there is no risk here. Okay, in these products there's no risk, and that's the reason. Okay, you'll be getting around 2 to 3%, or now it's like 6 to 7%. RD little bit above that. Okay, something like this in this range. Okay, but when it comes to these products, savings deposit, fixed deposit, recurring deposit, there's no risk involved in it. Okay, but when people are not sufficient, when people are not okay with this particular return, okay, then you have to go for the next level of products, okay, for a greater return, and which involves risk. When the return is increasing, when you are expecting a return from a financial product, take it for granted, okay, that the risk is going to be there. Returns alone cannot increase alone. Okay, it cannot alone increase it. Okay, when higher the returns, higher the risk. Yep. So when you are going to move from this particular category to the next category, what is that? Mutual funds, or above that, individual stocks, anything like that. We went to derivatives, options, futures, like that, right? So when we are moving from no risk level to high risk level, okay, or risk level segment, we are going to have an increase in the return also. So why people go into mutual funds in the first place, and why people have to go to mutual funds at some point of time, is because, guys, you cannot expect huge returns in the safer products alone. Okay, if you're in the safer products, the return is also going to be less. So when it comes to mutual funds, okay, so what is that? Assume a layman, a person who have no idea about stock market, who has no idea about how the market works, nothing. Okay, but he has good amount of money. I have money, but I don't have time. I don't have I don't know how to actually pick up stocks, or I don't know. I can't keep on actually looking at the best stocks available like that. Okay, so what will people do? I want to hire an expert who can manage my portfolio. Okay, an expert who has a portfolio or can manage a portfolio, and I'm happy to invest on the best portfolio possible. So that is where comes the mutual funds portfolio management system, PMS, and so on. And the most common is mutual funds. Let me go into mutual funds. So what is a mutual fund and how it is actually effective for a lot of people? Why is it suitable for everyone? Mutual funds. If you actually take a mutual fund, say we have like Mira Asset Management Firm, okay, and then SBI, Kotak, HDFC, every single company. So many companies are there, okay, which are fund managers. Let's take, for example, say SBI. Okay, SBI, they have their own asset management or fund management kind of. Okay, so SBI, there are a lot of mutual funds in SBI itself. Say under SBI, you will be seeing so many mutual funds. Okay, mutual fund 1, different mutual funds. Okay, so I'll come to that in detail. Mutual funds is there, and each of this mutual fund will have a fund manager. Each of this mutual fund will have a fund manager. Okay, SBI is a company, fund management. Okay, mutual fund, there are so many different mutual funds, and in each of the mutual fund we have fund manager. Who is this manager? He is the one who is having, say, some 10 to 15 years of experience, okay, in managing a fund. Okay, and he is the one who is solely responsible for managing the portfolio. Okay, a portfolio of stocks or bonds or various other things. Okay, a portfolio is going to be created, right, under this mutual fund, and the fund manager is a person with experience who is going to manage this entire fund, okay, for going forward. His only job is to manage the fund properly as per rules and regulations, following the SEBI rules and so on, so that people, the investors, are getting benefited. So now a fund has been created, a portfolio has been created with 30 stocks. For example, 30 stocks has been created by this guy. Okay, so in order to actually put money in this particular 30 stocks, right, he needs money. The company cannot keep giving him money, right? What is the use of company giving the money? Okay, how much they can give? Maybe 100 crores, 200 crores, like that. But they want to actually do in a big scale. So how to raise money? Raise funds from public. They need funds, correct? They need funds, and they are going to raise funds from public. So why are we going to give the money? Okay, that is a need. Okay, you are seeing the need from the company's perspective. They need fund. They have a portfolio. They have a person. They have all the things set up. They need fund, and they are going to ask us for money. But why are we going to give the money? When we are going to give, okay, from the public, from our point of view, okay, what are we going to actually expect? We are going to only give we are going to give, save money or invest money. Okay, invest money. Second one, once you invest money, what are the benefits? Are you going to spend any time? You're not going to manage the fund. This person is going to manage the fund. So what is advantage? You're going to save time. Okay, are you going to actually keep on how much? Okay, so 30 stocks. In order to actually put your money on 30 stocks, how much money you will be requiring? Average, maybe if you take even 1,000 rupees per stock, okay, you will be requiring 30,000 to buy one share of 30 stocks. But in this case, okay, since it's going to be a pool of fund from various people are going to be used, you can start with smaller capital. Small capital is required, say 500, in some cases 1,000, like that. Even a small capital is good enough to start your investment on a mutual fund. So with this small fund, when you're investing, okay, you're going to get huge diversification. See, diversification is what? Putting your money on multiple products or multiple companies, thereby reducing the risk. Whatever money that you're going to invest, okay, you're going to get a small stake of this. Maybe not one stock, maybe 0.2 stock, 0.2 of this is what you're going to get. But thereby getting the advantage of diversification. Okay, and once in a while, this person is going to keep on changing the 30 stocks once in a while, every 6 months or every 1 year. Okay, as per the standards that they follow. So is there any requirement that you have to put effort? No effort from your end. Okay, no effort from our end. So when it comes to mutual funds, the person who is going to manage the fund, he is going to put all the effort. Okay, he is going to select all the 30 stocks. Okay, and he is going to put all the time, all these things is going to be saved. What is the only thing that you will be doing? Investing your money, and it can be as low as 500 also. Okay, of course you can put even 50,000 also. It's up to you. But minimum, most of the mutual funds are having an option to actually start investing at 500. Sorry, diversification. Even if you're putting 500, maybe you cannot get one stock, but you can get 0.1. But still, for 500, you are getting a small portion of it. Thereby, you are getting that advantage of diversification, which means the risk is getting diversified. Your money is being put on 30 stocks. Okay, thereby getting the advantage of diversification. So a person who actually should be choosing a mutual fund, or actually everybody should be choosing a mutual fund, but who is going to get maximum advantage is a person who is not having time, who is not having like huge, okay, I don't have time at all. I don't have any idea about how to actually pick stocks and so on. Okay, but I want to actually utilize my money to the best possible. Okay, yeah, I want to utilize my money to the best possible way. I don't want it to be sitting under the savings deposit FD. I want more return. Okay, that's the reason people will go for a mutual fund. Okay.